Amazon set to report quarterly results after the bell today. Shares are trading around $190 right now. Our next guest has a price target on the stock of $210. For more, I want to bring in Rohit Kulkarni, senior analyst covering internet and capital markets at Roth Capital Partners. Good morning to you. What are we looking for this afternoon? What's the big takeaway that you need to hear to get your price where to hit the target?
Hey, thanks for having me. I think the bar is high for Amazon and all the mega caps, I think, heading into Q2. I feel there are three things we are looking for. One is cloud growth acceleration. The high teens growth is what would hold the stock here and push it higher. Second is retail profitability. They've been ramping that up, and we expect that to ramp up as well. And third is just the narrative around all the surface areas that they can do to improve using Gen AI. As in, we are hearing some of those things in the cloud, in advertising, but we haven't heard much on retail. So that's the third narrative, but the first 2 points are cloud acceleration, and second is retail profitability.
Is there any takeaway from the Meta earnings yesterday that you think has any implication for an Amazon?
There's two takeaways, in my opinion. One is ad market is strong, e-commerce, retail is strong, and Chinese e-commerce advertisers are continuing to spend on the U.S. market. So there's a checkbox from a macro standpoint that yes, Amazon should have a pretty good macro backdrop as far as e-commerce and retail is concerned. The second is investments in AI. I think the way Zuckerberg is getting very aggressive with AI spend, with the capital expenditure on AI, buying GPUs. I think there's no other company than Amazon that is set up to succeed in AI on the cloud and will have the need to spend more. So I think how much is Amazon willing to spend? We know Amazon is never scared to spend any amounts of money, be it building rockets to the moon or whatnot. That was a joke, by the way. But that's the second biggest kind of concern or worry that could hold back the stock if we suddenly realize that we are in a big spend pattern.
Well, I was going to say it's not really a joke because they're trying to do something very similar. But on the AI front, we're also talking about the success of Llama, which is open source. Of course, Amazon has a big investment in Anthropic, and they're competing against OpenAI with its partnership with Microsoft. And apparently are developing their own closed model themselves. Do you want them investing in it, or do you think they have to? I mean, one of maybe the lessons, you look at Apple stock, they may not have to invest in it. They may just partner, and that may work even better for them.
I think Amazon was caught a little bit flat-footed when it came to developing their own frontier models. So, but at the end of the day, the strategy that they are conveying to the street is very, very clear. They don't believe that there is not going to be one or a small set of models that is going to rule or have use cases that would absolutely govern all of enterprise IT spend in the next 3-5 years. So they're creating almost like a bedrock, which is the name of the product, but essentially a place for everybody to access those models. So that's what the strategy is. So perhaps a couple of years from now, that strategy may play in their favor.